how to find motivated sellers of below market value properties in today's market. Well, there are many out there who are saying that below market value properties are a myth in such a buoyant market. No, they're not. And in this video, I'm going to share with you 5 golden tips to make sure you bag a below market value property today. Hi, my name is Ranjan Bhattacharya. I've been investing in property for 30 years. You may have seen me on the hit Sky TV show Property Elevator, or you may have attended one of our Central London property networking events. On this channel, we put out new videos each and every week, all to keep you on top of your property investing game. If you haven't already done so, subscribe and hit that bell icon. You'll get notified as soon as we upload. So let's just deep dive straight in and go to tip number 1, which is to make sure you have the right mindset for below market value and looking for motivated sellers. The key thing is to realize that motivated sellers and below market value properties are around in spades, whatever the market's doing, in any market conditions. We talk about the property market as being a market, but it's not really a market like, say, the stock market. If you want to buy shares in British Telecom, then the price of British Telecom shares is set by the stock exchange. There is one price at which you can transact in shares at any given time. If you want to buy Bitcoin, there's a price of Bitcoin this second, and that is the price you have to pay for it in the moment. The property market, on the other hand, is more like a street market, meaning that there's no central body like the stock exchange or whatever that sets the market price for every transaction that takes place at any given point in time. So that means it's an imperfect market. A price that's paid for a property is determined by mutual agreement between a buyer and a seller. And since every buyer and seller are completely different, you will get a completely different price outcome for each negotiation. 90% of all residential properties are actually owned by owner-occupiers, and they're driven by all sorts of emotional reasons for wanting to sell or trade up or trade down a property. And when you get emotion involved in any selling or buying decision, then you get even more anomalies. So the way the property market is set up means that below market value properties are relatively straightforward to find. Now, it's about your mindset. Remember, if you're buying your own home, then you're often paying a retail price for your property. In other words, you're paying market value. But you are in the property business. You are a property entrepreneur. And when you're in a business of any kind, you don't look to pay retail price for your raw material. You're looking to pay wholesale price. Most people make the mistake of going out and looking for below market value property. You're not actually looking for below market value property. What you're looking for are motivated sellers. Motivated sellers are those people who are motivated to sell for some other reason than obtaining the highest market price. So what you tend to look for is the circumstances which give rise to greater seller motivation. And that's where the 3 Ds come in. And these are the all-time classic: death, debt, and divorce. Now, during COVID, of course, there has been a little bit of an anomaly in these 3 circumstances, these classic 3 Ds. Now, with debt, of course, there's been pretty much moratoriums on mortgage repossessions and such like. So that's meant, and of course low interest rates have meant that repossessions have been at unusually low levels. With death, of course, sadly, more people have been dying from COVID, but the issue is the probate process. The probate process has to take place before a property can be sold. And that process has also been slower during the COVID shutdown period. And then on the subject of divorces, there seems to be less of those during COVID. There's been some research from the Marriage Foundation, which says twice as many unions have improved during lockdown. So what I'm saying is the 3 Ds are the classic motivating circumstances which make people want to sell below market value. Now, all those 3Ds have been hit a little bit during COVID. But as we come out of lockdown, we will see a normalization of the marketplace and the whole world, and also the circumstances that give rise to the 3Ds. Now, some of you may be thinking I'm being a bit mercenary here, talking about motivated seller circumstances, the 3Ds and all of that. But that is not the right mindset, and I want you to hear me out. What we're really talking about is helping people with a particular problem. Now, let's take repossessions and debt, for example. If you actually get repossessed by a bank, you're in a very bad situation for many, many years to come. First of all, it's not just the debt you'll pay. I mean, if you hand back your keys to the mortgage company, it's not just the debt you owe. It's all the admin fees and penalty interests that they'll just load onto the debt, which will mean that you'll have virtually nothing left. And you may actually end up owing the bank further money. And guess what? Your credit rating will be stuffed for the next 6 years. And what they tend to do, and all banks do this, because they can pursue you, they can pursue the debtor for any outstanding debt for up to 6 years afterwards. So what they tend to do is wait until you've got back on your feet, and in year 5, pursue you for a shortfall. That's what happens when people get repossessed by the bank. Now, if you are coming in as an investor and offering the person who's about to be repossessed a deal where they can walk away, maintain their credit rating and everything so they can fight and live another day. Yes, they're selling it to you at slightly below market value, but it's a lot better. It's a lot better than being repossessed by the bank. When you're dealing with couples who are going through a split, of course, that's an immensely stressful time. You know, is that really a time where you want to be putting your property on the market with an estate agent, hoovering it up just before there's a viewing, and then having hordes of people traipsing around, you know, looking at your curtains and all of that, and then tire kicking and giving you offers and stuff on a Sunday morning? You know, no. Often you're going through quite a bit of stress already, and you just want a quick, definite solution so that you can sell and move on. In the current market today, by the way, more than 1 in 3 property transactions on the open market through estate agents actually fall through. And that can add to a huge amount of stress if you absolutely need to sell. You know, the last thing you want is to, and people go through these things repeatedly, you know, they're chains of buyers and stuff. You know, your buyer has to sell their property, their buyer has to sell their property, and it only needs one link in that chain to break or fall through, and it scuppers the whole thing, and you're back to zero again. And when you are selling in the open market, to actually achieve a sale from the time an offer is made to actual completion, it's typically more than 3 months these days. And some people can't wait that long. Now, investors offer a different proposition. And this is what you got to get in your mindset. Now, when you're an investor, of course, you have no sale. And you will have your power team around you of solicitors that can transact quickly, of brokers that can get you funding and buy-to-let mortgages and the like quickly. So you can actually engineer a purchase of a property within a quick frame of time. And because you're not at the mercy of any downward chain, you can actually transact and do what you say you're going to do. Now, for the motivated seller that needs to sell quickly, that offer is worth its weight in gold. We see this in several markets. If you look at your motor car, for example, you can sell your car online. You can sell it privately, and you can have a whole bunch of tire kickers come around on viewings and try to get market value for it. But if you want to move on and sell your car quickly, there are all sorts of we buy any car type services. You punch in your registration plate. You know you're not going to achieve market value for that car. But what you do know is that within a fixed period of time. You'll walk out with a check for money, and then you can move on onto whatever else you want to do. And that is the service as a property investor you are providing to your sellers. Hey guys, do me a favor, smash that like button. It shows your appreciation and it means that more people like you get to see this video. Now, when you're looking for motivated sellers, it's not about being lucky. It's about creating your own luck. When I tell people about some of my deals that I do, some people say that I'm just lucky. No, it's not. It's how you systemize being lucky on a regular basis. If you're not finding below market value deals, my first question to you is, how many opportunities are you looking at? What is your pipeline of leads and opportunities? So systemizing your luck is all about having a funnel of leads and opportunities that you are looking at each and every month. So here are my numbers for your lead flow funnel. You've got to be looking at 50 leads and opportunities. You've got to have 50 leads and opportunities coming into your email box each and every month. Out of those 50, you'll probably find that only 10 will meet your investment criteria. Out of those 10, you'll be going to see about 6. Out of the 6 properties that you go and see, I'm a big fan that if you've got that far, you should be making offers on pretty much all of them. So you'll be making offers on probably 4 to 5 of all the properties you see, because everything is worth something at a price. And out of the 4 to 5 offers that you make, you'll end up doing 1 deal. So to get lucky each month, or to get lucky every 2 months, you've just got to be putting 50 deals, 50 leads and opportunities into your funnel. If you're not in it, you're not going to win it. It's as simple as that. If you're just looking at 1 or 2 properties every month, then it's going to take you a long time statistically before you do that deal. Up the number of leads you put in your funnel, you'll up the number of leads that meet your investment criteria, you'll up the number of deals that you'll go out and see, and you'll up the number of offers that you'll make, which means that your deal flow will increase. We'll get back to the video in just a moment, but what I wanted to really tell you about was what is the most exciting opportunity in property right now, and that is repurposing defunct commercial buildings to residential use. Now, most people don't really know where to start, what to look for, and how to exploit these opportunities, and that's why I've prepared 90 minutes of free training for you to get you started on this wonderful journey. You can register for this free training at property-workshop.com. Join me on that free training, and I'll leave you to enjoy the rest of the video. Now, there are 3 essential ingredients for getting a below market value deal. And quite frankly, if all of these 3 ingredients are not there, you simply will not get a below market value deal. And people waste their time. People waste their time on deals and opportunities where just 1 or more of these 3 ingredients are missing. So what are these 3 ingredients that must be there to get a below market value deal? Well, number 1 is the motivation. By motivation, there must be a clear and compelling reason why the seller has to sell. If your seller has just put their property on the market to see what happens or whatever, and it's wishy-washy, forget it. It ain't going to happen. There must be a clear and compelling reason why they need to sell to move on with the next stage of their life. Number 2, alongside that clear and compelling reason for sale, there must be a deadline in the near future by which that sale has to be achieved. Now, the compelling reason may be a job move where they're going abroad and they need to pack up and they need to be out of the UK in the next 2 months. There you have it. Compelling reason, clear, definite deadline, when a sale needs to be achieved. And the third agreement is the capacity to accept a below market value offer. And by that, I mean equity in the deal. If someone bought a new build property last year on a 95% mortgage, even though they may have the motivation, even though they may have a compelling deadline, they simply don't have the equity in the deal to accept a below market value offer. How can they sell that property to you 25% below market value when they've got a 95% loan on the property? It ain't going to happen. So before wasting too much time on any lead or opportunity, you need to figure out quickly whether these three ingredients actually exist: motivation, deadline, and capacity. Now, the next two tips are really two sides of the same coin, and they're all about getting to the problem that the seller is facing right now, the problem that you can engineer a solution to kind of help them and help yourself at the same time. Now, there are all sorts of ways of structuring a property deal, and I've got videos on this that we've talked about before, such as delayed completions, subject to exchange, options, lease options. There's a whole variety of techniques that you can have in your toolbox to help come up with a solution which is win-win for both the seller and you. But too many people learn about a solution like lease options, and they go about trying to apply that solution on every problem, which is a bit silly, really. It's a bit like having a toolbox with just a spanner in it and trying to do every DIY job you find with just that spanner. What you need to do first is figure out what exactly the problem is that you're trying to come up with a solution for. Now, I hope you're enjoying these tips. Smash that like button. It really means that the YouTube algorithm shares this video with more people like yourselves. Also, tell me what you think. Have you had success buying below market value property from motivated sellers? Let me know in the comments below. So to engineer the right solution for the vendor and for you to buy the property in a way that works for you, you really need to meet the vendor and probe the circumstances behind the sale. I've got other videos on negotiating with the vendor, and you can have a watch of these. But what I want to share with you in this video is the magic question that you need to ask the vendor. Now, before you can come up with a solution, you need to find out what they actually want. What is the end game that they're aiming at? And this is what I call the magic wand question. And the way to frame this question is really to say, look, if I had a magic wand, where do you want to be at the end of this transaction? And it's a very open-ended question, and you're framing it in a sort of fantasy kind of way, so then no one's afraid of offending you or anything like that. And you'll find that by asking that sort of open-ended question, you will get to not just the price they're looking for, but what they're actually looking to do there afterwards, after selling the property. And once you know the seller's ideal end game and what they want to achieve by the sale, perhaps you can engineer a solution that kind of is win-win for both. Now, ultimately, there are two reasons why people are looking to sell a property. And if you can understand which one of these two is the driving force, then you are best placed to coming up with a solution. Now, the problem is usually with the debt on the property, or they want to release cash from the property to do something else. Now, depending on whether debt or cash is the problem, that gives rise to a whole set of different solutions depending on which scenario that is. Now, I'm not going to tell you that in this video because I've got to have something for the next one. And if you want to make sure you get that next video, if you haven't already done so, subscribe and hit the bell icon so you're notified as soon as we upload. Now, the principles of motivated sellers and below market value work equally in residential or commercial property. Now, I do run a whole set of specialist training on commercial property, and particularly how to find motivated sellers of commercial properties. If you want to catch me on some free training, then sign up for that at property-workshop.com. See you guys in the next video.